Yer, what's up, everybody? Welcome back to my trading journey. It's your boy Orlando, aka King Smitty, and thank you all for joining me today. Before we get started, please take the time to like and subscribe. And make sure you subscribe and you hit the notification bell so that way when I drop any material, you get that notification. You can stay up to date with what's going on in the market and how everything's affecting it. Today I want to talk about. First of all, I have a surprise for you all at the end of the video, so stay around to the end just so you can see what that surprise is. But today I want to talk about the government shutdown, right? And when it comes to this government shutdown, let me see if I can find all my material really quick. It affects the stock market, and we're going to see how it affects the stock market today. If you look right here, they say that there's no path. The government shutdown it creeps closer as the last ditch for the GOP efforts collapse, and that's saying that the most recent loss for this speaker, the House Speaker, which is Kevin McCarthy, is likely to be the latest confirmation that the shutdown on Saturday night is all but inevitable at this point. For y'all who don't know, tonight is Saturday night, September 30th, 2023, right? There is no path to law. So as of this time, with no agreement going on in the House and the Senate, it looks like the government is on its way to shut down. And with the government shutdown, that could obviously bring issues, not only for the stock market, but for people's individual lives, right? And with the government shutdown, money isn't spent on anything except for the essentials. So that may be like law enforcement and maybe first responders, like firemen and things like that. But other than that, a lot of government employees, the thousands of government employees, will not be getting paid. So that's quite something. And not just the people in DC, but your local government, like the mayor, governor, all of them, people with government jobs, they might not be getting paid. Those paychecks may be delayed for a little minute. And then if you look at this article, though, it's not all bad for the stock market when it comes to government shutdown. And it says the worst government shutdowns in the stock market. What history shows usually happens, right? And it opens up, markets tend to hate U.S. government shutdowns and the uncertainty they cast on the economy and big companies, right? Because, like I said, by the government paying additional things, only the essentials, I'm not sure how this works, but at that point, does government contracts get paid? Because they're not considered essential. You have these companies, not even big companies, but smaller companies, who have government contracts. And if they're not getting paid, that's going to cut into their revenue. If they're not meeting their quota because of that, it hurts the company when it comes to earnings season. But then it says that Lori Cavacina, she stated that they found that in the lead up to the last 7 government shutdowns of 10 days or more, dating back to 1976, the median S&P 500 decline was 10.2%. Right now, in the last 7 days, Well, not even the last 7 days. Let's look at from the highs. Well, the highs was back in July. We'll do their most recent highs, which was September 1st. It was 452, right? Currently at 427. So we're already down roughly like 5% from the most recent highs. So we're not quite there at the 10% decline, but we're 10.2% decline, but we were making our way towards it, right? The largest decline of 19.8% came ahead of the government shutdown that lasted from December 21st, 2018 to January 23rd, 2019. The smallest decline in stocks tallied 3.7% ahead of the 21-day shutdown that ended on January 6, 1996, right? So we're already a little bit past the smallest decline, but we're not near that biggest decline at all. We're kind of closer towards the lower end right now. During the actual government shutdown, when it actually happens, which could be tonight, so we'll be affected by that Monday morning, right? Yep. And it shows that the S&P 500's median drop was 2% on average, which, it's not the best, but it's better than an average of 10%. That could be a handful. And if you look at these, this next slide right here, it says the government shutdowns and the markets, and you can see during those first couple of days, the first 9 to 10 days, it's a lot of sideways movement. The market hates uncertainty. It doesn't know whether the market's going up or going down. And when it goes that little choppy movement, it could cause a lot of loss, money wise, especially if you don't know what you're doing. You could be buying at a little high and let it drop. So if you're going to be trading, I would suggest, be precise as you can. Do your study. Don't just jump in by, this looks good at this price. But you should always do that, even when it's not a market shutdown, a government shutdown, I mean. But when it comes back to this, it says there are at least two positives when it comes to the markets and shutdowns. And first, markets often roar back after bickering politicians find an agreement on thorny issues and they finally reopen the government. The markets come flying back. In the 12 months following a government shutdown of 10 days or more, the S&P 500 has gained a median, which is an average, of 18.9% in the 12 months following it. So I mean, if this government shuts down for a little bit over a week and a half, there's a possibility we could see monumentous gains, and that's just in the S&P 500. So imagine you owning one of those great companies individually inside the S&P 500. For example, Tesla, Nvidia, Amazon. You know what I'm saying? Individual stocks. So the S&P 500 might go up 18%, but these stocks could go up like 30%. I'm not saying it will, but I'm saying it could. Certain stocks hold the stock market up. Like, for example, the AI chips has been holding the market up for a little minute this year. And don't let Apple be green. Because if Apple's green, the market's gonna follow. Apple's one of those big dogs that can hold the market almost by itself on their shoulders. The number two though, the last 20 shutdowns going back to 1976 reveals that stocks have been up 50% of the time during the actual shutdown period. So if you go back to this little chart up top, and it says, like, you can see those first 10 days is really choppy. Sometimes it's up above 0%, sometimes it's below it. But once it hits that 10-day chart, 10 days on there, it's usually up above it. And in that shutdown of 2018 and 2019, it was way above it. It got above 5% at one point, almost 7% gain during the shutdown, right? So the government shutdown is not ideal, especially for those with government jobs. Um, but with pain, that temporary pain can come a lot of gain in the long term if you know what you're doing, right? Um, so that's the government shutdown information. Now what I'm going to look at is the S&P 500, right? So let me pull this up. All right. Now we have the SPY up, S&P 500, and I just wanted to see something real quick. Let me add my indicators on here. For y'all who don't have indicators on your charts, I would suggest you find some that works for you. I like the Bollinger Bands. I don't use them often, but once I learned how to use them, they were very helpful. But I like the RSI, which is, like it says right here, the Relative Strength Index. Did it add it? I don't show it on there. RSI. It's not showing up now. Reset chart view. Yep, my RSI isn't showing up. I apologize. But let's do a dark theme. Ooh, I like that. I also like the MACD, which is the moving average convergence divergence. Hopefully that shows up on the chart. Nothing's showing up. I wonder what's going on with them, because they were just showing up not too long ago. I'm gonna back out and come back in. Trading View. And for all who don't know, I am using Trading View. It's a very good app when it comes to looking at charts. SPY. That's the S&P 500, EFT and Trust. We're back in this. We're gonna go 6 months. Okay. Let's go 3 months. I'm on the hour chart. We're gonna go to the daily chart, the 1 day chart. Why is it on 30 minutes? I said 1 day. Okay, let's zoom in. Year to date, 3 months, 1 month. And then it went right back to the 30-minute chart. All right. I'll zoom in. That's fine. So as you can see, this is the S&P 500. Let's do it like this. So you can see the top was around July 27th, 2023, right? And I want you to see something. Where's a brush I can use? Look at this. Boom. Right? Move you over a little bit. Boom. Boom. That's a head and shoulders on the S&P 500 for the daily chart, right? Let's see if we can get that neckline going. We're gonna do this horizontal line. Boom, and that's the neckline. You see it goes up above it around June, comes back, it touches it, goes up to new highs July 27th, comes back, it touches it. That's twice. It goes back up, it doesn't reach new highs, it comes down, it breaks below it. A common thing for head and shoulders, once it breaks that neckline, is it comes back up and touches that neckline again. But this time, it's normally resistance. And as you can see, yesterday, it gapped up on the open, but it closed lower. So it did reject off of that neckline. I made a few bucks on it doing a little, a call actually on one of those bounces. A quick 13%. If this continues to fall, let me show you this. So another horizontal line. This is why people charts be looking all crazy like this. If it continues to fall, the next spot of support that I could see genuinely is $417. As you can see, it's kind of touching over here back in February. It kind of touches over here in April, in May, and then it bounced off of here at the end of May, in the beginning of June. So I can definitely see it. Where's that pin at? Almost going like this. It hit. It comes like that. Now from there, what it'll do, I don't know. That's when we have to watch, because if it bounces up off of this, then we can put some call options in, and we can ride this back up to maybe 430. But if this, because the head and shoulders pattern, the boop 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 is a reversal sign. What we don't want to see it do is drop down to this line, to this support. You can see it was being used as a support line back in February, resistance in March. That's my birthday. Support all the way from April pretty much through May. It was consolidating around that area. So if it breaks 417, at that point it can go down to 405. So if it breaks 417, at that point you could put a little money in there and put some puts for the 405 and let that run down. And you can see this MACD, every time that purple crosses below the yellow, the stock drops. You see right here, July 28th, July 30th, 31st. Right here, you see it drop, it crosses, and right here, it's not a dragonfly doji. It's a reversal doji right there. You see, there's no more. Yeah, that long red candle. And then the bulls couldn't sustain it right there. So that's why it's a longer wick, smaller body. And you can see right here on the RSI, the MACD, I'm sorry, it also crosses right here as well. When that blue line crosses below the red line, it's another sign. So right there you have two signs. Let me get this pin out. You have two crosses right here, and you have a reversal doji. That's why you really got to learn the technical analysis of things. You can see right here it crosses, but it goes up this time. It crosses roughly around the same day almost, the 25th, which is Friday, the 28th, which is Monday, two trading days apart, and you can see it starts to go back up. That MACD and the RSI, I really enjoy those two. Um, and the only thing I'm missing off of my chart really is the EMAs, the estimated moving averages. You can use those when those cross as well. And sometimes the chart uses those lines as support and resistance. But that's my view of the government shutdown and the S&P 500. If y'all been rocking with me this far, I really appreciate it. And since y'all been rocking around with me, I do have a surprise for y'all. I do have my new logo that I've been working on, and this is it. Where am I putting it at? I might just cover the whole screen with it. But this is my new logo. I hope y'all like it. It shows the bull holding a bullish candle. It shows the bear holding a bearish candle, split in half. I kind of showed it to my Facebook. They gave me some feedback. I took it. I applied it. This is my logo. I enjoy it. I appreciate y'all for rocking with me. And don't forget, on this channel, we do try to react, don't predict. Of course, I do make predictions on where I feel like the chart is going, but I don't trade based off of my predictions. Like, I'm not going to go ahead and buy a 405 put right now because I don't know if it's going to bounce off that 417. I don't know if it's going to break through support or resistance right now. What I do is once it happens, then I get to it. But I don't try to jump ahead and guess where the market is going. Once it gives me those clear signs, and that's why I'm saying the MACD and the RSI and these candlesticks will give you those signs. And once you get those signs, then you make your move off of there. React, don't predict. Appreciate y'all for rocking with me. Yeah.